Hello, everyone. It's April 29, one day before the last day of the month, and we're going to watch the Awesome 10X Global Market Update. It's Nikki Yu. Thanks for watching. Let's discuss. So we are going to discuss two things. You've got Spotify and Pinterest, bad earnings last night. What exactly was in the earnings? What exactly happened for those stocks to fall quite significantly in a day? So let's read the Spotify earnings. Spotify stock tumbles after the earnings is signaling that user growth is slowing. So let's actually read their exact earnings straight from Spotify's newsroom. Investors go to the Spotify Investor Relations. Also announcing that Spotify, prior to this earnings release, actually reported that they were working with Facebook for you to play a lot of songs just straight on Facebook. So let's see. Spotify's mini player for Facebook launches today. That was 2 days ago. So Spotify is trying to diversify its revenue streams from working with many platforms so that you can access music in your Apple car, in any of your cars, and even here in your top stories with Facebook. Let's read the news straight from earnings results. Newsroom, growing users and subscribers. So far for Spotify, they've got 356 million monthly paid active subscribers. Active users, and about half of that, or 158 million, are paying. So over half means that they don't pay as well. Around 200 million aren't really paying anything to Spotify. And as you well know, Spotify makes a ton of money from digital advertising. Spotify announced their first quarter performance, so it's twofold. It's digital advertising, and of course, a lot of it is also subscription. Building the world's audio network. They are expanding into 178 markets. They're already available in 178 markets globally, and they plan to expand more into 80 plus new markets, including Nigeria, Pakistan, Bangladesh, Sri Lanka, Ghana, Kenya, Tanzania. We want to enhance our platform and user experience. These are what we launched. We partnered with Russell Brothers and Agbo. Multi-year, multi-series deal will bring some of Agbo's most exciting storytelling universes to Spotify. We acquired Locker Room. This is to announce our plan for a new live audio experience. I'm actually bullish on this Locker Room. This is actually a sports type clubhouse wherein you kind of listen to the best insider stories, juicy stories that you'd only learn straight from the Locker Room. Launched Renegades, born in the USA. This is President Barack Obama and Bruce Springsteen joining forces in a new podcast. So they're also doing Stream On. This is to explore the power of audio, the journey of creation, opportunities ahead for millions of creators and billions of fans. You want to stream on. Introducing Loud and Clear. This is our new site to increase transparency and shed light on the complicated economics of music streaming. Now, this is the new Spotify experience. This is our desktop app. As you can see here, it's an improved look and a feel for an app for desktop and web. It aligns the experience, making users experience music and audio better than before. 36 new languages on mobile, building a truly borderless audio ecosystem, bringing the platform total to 62 languages. They're empowering creators. Take note that they've already owned Anchor and WordPress partnership. This is to build a truly borderless audio ecosystem, bringing the platform total to 62 languages. So let's say you want to read the news or you don't want to read the news. So you just want to listen it through audio. Anchor supports that. Spotify supports that. Equal campaign to foster equity for women in audio. Celebrate their contributions. Flex your power to listen. And it's notable that they are now the new global home for songwriters, producers, and publishers. That would be for a central place to access all the resources that they have made available to all the songwriters and publishers community. So you can learn more straight from what they believe in this one. Let's read this. Spotify founder is discussing the economics of music streaming in Loud and Clear. And I'm going to actually understand Locker Room better for you. So Daniel Ek said that on March 18, he published this. Since 2014 lows, the music industry has actually grown by 44%, driven primarily by streaming revenues, increasing 5x over the same period of time, 2014 to 2021. In 2020 alone, Spotify paid $5 billion and made up 20% market share of the total global recorded music industry revenues, more than any other streaming service. That number is massive on its own. And it does not even include the other music streaming services or other sources of music revenue. That's $5 billion a year, guys. Something that Spotify did by just paying all of these Warner Brothers, Sony Entertainment, Warner Music, UW United, so the big three. Now, still artists ask me all the time why they aren't making money. If the music industry is generating so much, where the hell is it going? So we are launching a new site. This is Loud and Clear to increase transparency and shed light on the economics of music streaming. Streaming is thriving and has been key to help support all the artists to find a global audience. There are now more artists than ever before. That is awesome. It means new genres, more music crossing borders, and more artists finding new fans. It also means that new artists is joining Spotify every single day, along with that entire history of music that came before them. More artists want to share their art, reach fans, and earn a living from music, and it is happening. So far in Spotify, we are seeing more than $50,000 a year of artists are going 80%. The artists that have been earning $100,000 a year are up 85%. And the artists that have been earning $1 million per year is up 90%, meaning there are more and more artists which is now earning a lot of money even if they're just streaming on Spotify. Today, 57,000 artists now represent 90% of monthly streams on Spotify. And this number has just quadrupled in 6 years' time. This means that the number of most listened to artists in the world is also growing and are more diverse. Our goal is always to help musicians aspire to be or are professional to make a living. It is something we take seriously every day, similar to what Fiverr does, similar to what Upwork does, similar to what Grab does. Enablers, which is why we have to also discuss Shopify, the company that just broke into record highs again last night. So anyway, Spotify is, of course, supporting not just one artist, but millions of artists. And they're helping them find the same success. Fans will ultimately decide who will succeed and who will thrive. But we create more opportunities for more artists to reach more fans. We know that we have work to do, and we are confident in what we've built and the innovations that we will continue to deliver for artists and their fans. So we want to grow the money, pay it to the right shareholders, diversify and expand the number of professional artists succeeding. So with that type of earnings report, why did the market sell it down 10% then? Okay, wait, look. I need to just charge my battery, charge my laptop. Okay, there you go. Okay, so let's read more. So Spotify quarterly revenue is growing 16%. Paid subscribers are ticking up to $158 million. They added 3 million subscribers in the first quarter of 2021. They even announced that their revenues is 2 billion pounds or $2.6 billion. That is a growth from just $2.22 billion last year. Gross margin was 25%. Totally in that entire revenue in line with previous quarters. All right, so I can read the rest. Let's read this. Why is it tumbling then? The music streaming giant is currently competing with Apple and Apple Podcasts and Amazon Podcasts. They added, so far in just first 3 months of 2021, they only added 3 million paid subscribers. Now, because of that, some people see that it's slowing down. But here in Awesome10X, because we think about the secular uptrend, we don't really think of that as a bad thing. Adding 3 million subscribers is still a great thing, and we have to celebrate that. Now, for Wall Street, they feel that they miss expectations on the number of monthly active users. And in fact, the Spotify company even lowered the guidance for the entire month for the next full year. So this key metric is already growing 24% last year. And because it's 16%, some people are already fidgeting over that drop in growth. The metric that Wall Street wanted was 360 million, 2 million shy of 358 million. So growth has been the one thing that that always was the propeller for Spotify, which is having advertisers and also paid. So there. Let's take a look more news. Okay. There are signals that Spotify has competition from big tech. Notable too that Spotify has competition right now with Twitter, which is launching their own audio spaces. It's called Twitter Fleets. And of course, Clubhouse, which has their audio space. So in terms of audio, it seems as if everyone wants to take the share of Spotify. So for that reason, Spotify lowered its monthly guidance for its active users, saying that it now expects to just have 400 million users after projecting 407 to 427. I think that's the reason why some people got scared. Given the extraordinary operating circumstances we are facing right now, there is a likelihood of variances in our typical quarters. Okay, so another thing, Spotify saw a breakneck speed of user growth in COVID-19 as millions of housebound people are turning to entertainment on digital platforms. The group is facing a lot of rivalry from Apple, online Amazon. Of course, you didn't hear that, but of course, Spotify has a huge rivalry with Google's YouTube too. A pioneer in music streaming, Spotify is pushing strongly into podcasts, with podcast activity hitting all-time highs in terms of overall listening hours. Joe Rogan Experience podcast, for instance, performed above expectations in bringing in new users. Renegades, born in the USA, that is President Barack Obama, was also the second largest Spotify podcast in March. So in core financial metrics, Spotify is growing, albeit slowly. And the company had a net income of 23 million pounds in a quarter, up from just 1 million in the same period last year. A rare profit for the company since it has been public in 2018. Okay, so if you're going to ask the Awesome 10X commentary on Spotify, the answer is, of course, a secular long-term buy. So let's take a look at what we will do for Spotify. Your Spotify shares actually have dropped something in the realm of about, so far it has dropped here to about 40%. From a high of $380 to a low of $243, we think that the current price of Spotify acts as a support here at about near June 2020 supports of $240. It could even go to $220, but the Awesome 10X way is to buy $240 to $220. So last night it went gap down to 256 from a high of 300 prior to the earnings standpoint. So we think that right now what you'll see is that a muted range bound in the next 6 months or in the next 3 months. So there are two ways to actually manage your Spotify shares. If you don't have it, one way is to sell puts. Take a put right now, sell Spotify 240 or 220 strike. Let's actually lower it, 220 strike. Take $10 limit, meaning 5% yield. Also, that's a sell put. So that is a commitment to buy Spotify 100 shares at 220 if that opportunity came around. Now, if you can't see 220, even 230 strike is okay with me. 220 to 230 strike is good for me. That is a bullish selling puts. For those who aren't aware of options, it's actually a bullish call on Spotify. Now, we also believe that in the short term, maybe 300 will be a resistance. So there's two ways to handle that. You could also sell, but this only applies for those people who have Spotify shares. Don't do naked calls, all right? If you have 100 shares of Spotify, this is what you want to do. Sell Spotify 300 strike, take a $30 limit premium, sell calls until 2 months. So what does this mean? We believe that because of the Spotify user growth dilemma, that some people will be afraid to buy Spotify above 300. Therefore, Spotify calls at 300 is your short strangle. This is a sell put 220 and a short and a sell call at about 300. Now it's a covered call. We want to have 100 shares. So as much as possible, you want to buy as low as you can. How low? I think 240 to 220 is low enough. If you take a sell put 220 strike and it actually happens within the next 2 months, you actually will pay 100 shares. But since you got $10 limit, that means that your real cost is just 220 minus 10 or $210. If you also got a 30 limit strike here, or actually even a 15 limit will do, or just 5%. If you collect as many premiums as you can in the next 2 months, you actually lower and lower down your cost. So that's the first thing to do for Spotify. Let's talk about the other company, Pinterest, and then later on Shopify. So there are 3 companies that reported last night. Spotify, Pinterest, and Shopify. Here's what Awesome10X wants you to do with your money. Okay, for Pinterest, as you could see, it had a gap down after earnings. Let's read the Spotify. After Spotify, let's read Pinterest earnings report. Pinterest earnings. All right. So Pinterest earnings beat expectations. Why is the stock dropping? Let's read the earnings growth. It's missing on the user growth. Pinterest earnings. All right. Well, Pinterest, I always go to the investor results straight from Pinterest. Before reading the news, go straight to the source, which is the investor relations of Pinterest. So Pinterest says here that they announced the financial results. First quarter revenue actually grows 78% year over year to about $485 million. Their monthly active users are now 478 million. So just a while ago, you heard 358 million Spotify users. Now you know that Pinterest is larger in terms of users versus Spotify. So Pinterest right now has about approximately 500 million users. Their growth was substantial at 30%. The net loss was $22 million compared and in a one quarter EBITDA of $84 million. Whether it's recipe or just dream vacation planning for the future, I'm proud that we are now helping 480 million people every month find inspiration to create a life they love, said Ben Silberman, the CEO and co-founder of Pinterest. This quarter, we continued strong growth internationally, launching our advertising in Brazil. We made significant progress with shopping, making it easier for people to discover and buy products they find on Pinterest. Our results were very strong. We actually grew 78% year over year. Small advertisers came in to adopt, even the small and medium advertisers. So this is our highlights. 271,000, that's 271 million. It's now 480 million, a growth of substantial proportion. Net loss actually lowered because of that growth in revenues. Non-GAAP net income, very good. Adjusted EBITDA, what a great reversal. So first quarter highlights, how about the ARPU? This is what you have to understand. Out of that 485, you've got 390 million Americans. That means that your growth internationally is growing substantially. From only 35 million users to 95 million, that is almost times 3. So that's a 170% growth. Now your global monthly active users are now growing 30%. A bulk of that user growth is coming from this one, international. So very slow growth in United States. International is the bigger picture. That is something that's been evident, not just in Pinterest numbers, but also in Netflix numbers. The growth is in international. ARPU, this is what's important. Your ARPU in United States is large, here at about $4. Take note, international is just 26 cents. If you're bullish on international growth, you will see that ARPU international can grow as much as $1 someday. And therefore, with growth and ARPU usage in international, you will be very bullish on Pinterest if your time frame is not this quarter, but actually about 10 years forward. So the guidance, we continue to navigate uncertainty given the COVID-19 pandemic and other factors. Our current expectation is that revenues will grow around 100% year over year. In Q2, we expect global monthly active users to grow in the mid-teens to be around flat year over year. Okay, what are our priorities? Our priorities is the pin experience, advertising success, and shopping. Right now, we are investing in shopping. We expect R&D efforts to continue to focus on the pin product, ad product, measurement investments. We intend to grow our headcount further. In particular, we want to support our international expansion efforts. We think that these investments will support long-term growth and continue to build the foundation for a scaled business over time. Okay, so those are like just the highlights. If you want to know more, just go to straight to their events. This is their events and presentations. So the best companies always have webcast. If you want to watch it, press release, letter, and then presentation. I'm going to double click the presentation for you. So just to show the numbers, this is the route numbers. So for the last 5 quarters, you could see that the growth has been phenomenal, and year over year, growth of Pinterest is doing well. I think what got people disappointed is that 706 became $500 million here in terms of revenues. But that is actually a substantial growth if you think in the numbers. Now, take note that Pinterest has also grown from $12 to $90 prior to the earnings, which actually means that after a substantial 7x move, it's quite normal to see Pinterest go to $60 because $60 is still 5x from its lows. 12 to 60, that's still substantial, guys. Monthly active users is very strong, as you could see, quite substantial, 30% growth. Average revenue per user, this is what we are seeing here. The international has room to grow. Very strong international growth and strong average revenue, room for runway. All right, so non-GAAP costs and expenses, it's managed. 27%, R&D 24%, gross and G&A is general and admin, sales and marketing. So it's just normal. Okay, EBITDA, they're okay. So they've been actually positive over the last 3 quarters, 93 million, 300 million, $84 million. Okay, so what should we do for the Pinterest people? Okay, this is Pinterest. So as I said, Pinterest has been growing over the last 5 quarters. So it's already 5 quarters, 1, 2, 3, 4, 5. This has grown from about $12 here to about as high as $90. So I would say that this one should drop first to about $60. Iwan lang. Thank you. Salamat. So I think in the short term, what you're seeing here is just a typical correction. So I would prefer people to focus on buying these shares where? So my preference is to buy at $60 all the way to $50. I don't know if I can get at $40, but I will just play my cards right. And this is how I'll play Pinterest. Buy, how do you buy it at 50 to 60? To do that, sell Pinterest puts at $55. Take 3, even a $3 limit strike, 3 limit, or even a $2, 2 limit strike. 2 limit, and then 1 to 2 months expiry. To do that, and you'll be fine. So in the next 2 months, you collect the premiums while you want to buy Pinterest at that level, 55 to 60. So if you could do sell $55 puts or even $60, $55 or $60 strike, take a 2 to 3 limit. 3 limit, and it's okay. So that would hopefully allow us to buy Pinterest in the next 2 months. So my goal is that in the next 2 months, if Pinterest goes down to $60, that I'll be the first buyer. I'm a committed 100 share buyer. 1 contract of sell puts allows you to buy 100 shares of Pinterest and take a premium while you wait. So that's how I'll do it. Now, I'm not gonna short Pinterest, so I don't plan to do a sell call. But if you want to do a sell call, I think that the premiums are also very little after a drop like that. So there's almost nothing that you can get from a sell call. So what you want to do here is just a sell put on Pinterest. Alternatively, to those who can't do options, it's very simple. If you want to buy Pinterest, just post a bid at $50 and $60 GTC until the next 2 months. Around today is about April, so 6 months from now until October. Actually, until October. So just try to buy as low as you can, 60, 55, and 50. So that should be your goal in the next 3 to 6 months. Okay, last but not the least, Shopify earnings. So 3 earnings reports. Some companies did well, some companies didn't do well. Shopify was an explosion to the upside. In fact, some of our members actually went long out of the money options. If you remember, last Friday, we discussed in a Free Friday class how GME's Roaring Kitty made millions of dollars in just 10,000. How did he make $10 million in a $10,000? He actually did out of the money call options. So he had the $12 strike, and you can just watch that class if you want to check out that exact way on how to make your $10,000 become $10 million. Now, all right, so you can do that, of course, if you did the GME trade like Roaring Kitty did. So first, you have to really buy an out of the money call option. Second, you have to have $10,000. And last but not the least, your call option should actually explode in value if that stock per se went 10x in 4 months, which actually happened in GME's case. So, okay, let's talk about Shopify now. For Shopify, if you bought an out-of-the-money call option, did you make money? The answer is yes. So we had a client buying at $1,097 at Shopify. Instead of buying a stock, he actually bought a call option. I think I shared it in our Discord channel. So this is our Discord channel. Let me just show to you that. Okay, so Shopify, he bought 1 contract of or basically an ability to buy Shopify 1-3 call shares at 1-3, and then 1-2 option at $1. So 100 shares of Shopify at 1-2 and 100 shares of Shopify at 1-3. 1 contract controls 100 shares. Why do you think that the market value of that cost $2,000 and $25? Why did it explode? from 2,000 to 5,000, from 2,500 to 7,000, simply because 100 shares, 1,1, okay, 1,1 to 1,3, that was a $200 share price increase. That $200 share price increase here is 20%. If you did a call option, what it actually does is, let's do it for you. I'm gonna do it simple math for you. In that case, 1,1 went to 1,2. 1,3, sorry. So the actual price of Shopify right now is 1,3, and then the 1,1, so that's a $200 intrinsic value. So what the 1,2 call, which had no value before because it was negative 100, suddenly became positive 100, right? So if that call option cost him, as you can see, the cost was $39 then. Suddenly, the average price was $25. From $25, what happened is that it had an intrinsic value. So intrinsic value is calculated from the current price to the strike price. So this is how you calculate your intrinsic value, guys. So he bought $25 for a 1,200 call option. This was an out of the money. And then he also bought $19 for a 1,3 call option out of the money. So that was like 1 to 2 months expiry. Why do you think it exploded? It exploded because suddenly this 1,2 call option became $100, right? Because at 1,288, I can actually I can exercise that right, and it becomes $88 intrinsic. So from $25, it becomes 88, right? If I were to exercise. Now, that's the intrinsic value. Why is it 88? Because 1,288 minus 1,2, that's an $88 value. Now, why did this $19 call option also explode when 1,3 minus 1,288 has no value yet? The reason is because that 1,3 call option has 1 month to expire, June 18, 2021. It means that from today until June 18, 2021, some people are betting that Shopify, after their explosive earnings, will become valuable. And therefore, if it becomes valuable, that out of the money call option suddenly has value. From a tissue paper, it now has the right to become valuable. So from 1,288, if this out of the money option, which is 1,300 Shopify, becomes 1,350, somebody will actually choose to exercise that. And because that is June 18, 2021, you've got 70 days to actually think whether Shopify will go 1.5. That $19 1.3 call option can suddenly become $100 or $200. That's why people are willing to pay. The closer you are to that, from out of the money to in the money, the higher the share price of the call options will become. That's why it exploded. Actually, it exploded to the point that he actually regretted selling his shares because our client actually took profit at 100%. If he held it, it could be 100. It could be 300% more. With call options, the risk is that by May 18, so let's read that again. This is May 21, 2021. The reason why he sold his shares is because perhaps he doesn't want to commit 100 shares of Shopify and he merely wanted to trade the Shopify spread. But if he wanted to really own 100 shares, that would mean that he puts up $12,000 and then he sells it on May 21, 2021, approximately at whatever the price of Shopify is. So whether it's 30, let's say Shopify is $13 by then. So his $12,000 is $13,000. That means, since it's 120, it's 1.2 times 100, it's 120,000. The actual value of the call option is $10,000 if the share price of Shopify is 1.3. So actually, this $7,000 market value theoretically should go $10,000 if it will expire today at $1.3 shop. So this was just a snapshot. Now, if Shopify 1.3 is still 1.3, will you exercise it? No, because there's no value if me buying at the market at 1.3 or using this contract to pay 1.3 as well. So this one is from out of the money became in the money, but this one is still actually barely getting there. But even if it's barely getting there, because it's nearing, because not today is not yet June 18, today is still April 29, it's becoming valuable as time goes by. So I hope that you learned something about call options. And let's back to our topic, which is Shopify earnings. Let's just read the Shopify earnings. So as you can see, the company made a blast call all the way to about 1.3. What exactly happened to Shopify's earnings? The Shopify e-commerce solution, the stock is rallying on blowout earnings, surging after e-commerce boom fuels big earnings beat. Okay, so I'm going to read that for you. Again, instead of buying that, instead of reading those things, go straight to the investors of Shopify.com. Take note what I just did. People will talk about Pinterest slowing down. People, actually, let's read how CNBC News writes it. When you read news, it's how the news journalist understands the news. It's their interpretation. Their interpretation is that Pinterest is missing on user growth expectation. We, however, when we read the news, hey, it's 78% growth year on year. What's wrong? So shares of Pinterest dropped more than 10% after it missed on user growth expectation. The user growth is slowing, engagement is lowering as a result of easing COVID-19 restriction, meaning they're saying that you're not homebound anymore, you're not going to use your Pinterest. Is that true or not? False. Shares of Pinterest dropped more than 10% because the adjusted earnings per share is 11 cents. Revenues is 485 million. Monthly active users is 478 million. Average revenue per user is $1. Take note, everything ticks. All of it is a beat. Earnings beats, revenue beats, average revenue is higher. Monthly active users is the only problem that people have. Pinterest noted the strong correlation between user engagement and pandemic lockdown starting in mid-March. Okay, we read that already. So what is the reason why I shared to you reading the news and reading it straight from the horse's mouth? It's because most people just make their opinion based on what headlines they read. Whereas you should actually understand the company straight from the horse's mouth. Okay, Shopify, we have to go to the webcast or the presentation and the press release. So let's go to the presentation and the press release. This is the actual press release. Shopify announced that their growth is actually growing, accelerating 110% in just first quarter. So let's recap. Spotify grew 16%, Pinterest grew 78%, 30% user growth. Shopify grew 110%. So Shopify is the best in the three. Shopify grew 110% and after growing 114% already year on year. So basically it kept on doubling and doubling and doubling quarter after quarter after quarter. Shopify is a leading global e-commerce company. Strong results. Most entrepreneurs around the world are choosing Shopify to launch and grow their businesses, said Harley Finkelstein, the Shopify president. Our singular focus is to make entrepreneurs easier, make it easier for entrepreneurs to succeed. Merchant sales growth has been growing, accelerating, leveraging on our modern e-commerce technology, which helps them compete in any retail environment and engage with their customers wherever they are. If it's true that everyone is COVID easing lockdowns, why is it that Shopify's earnings is growing and growing? It's because that even as your COVID easing lockdown is happening, nobody is actually escaping the Shopify platform. Everyone still loves to do e-commerce. Digital e-commerce remains strong. Merchants are taking advantage of all the available capabilities of our platform, said Shopify CFO. We are focused on building a commerce operating system, helping shape the future of retail. The growth of the digital e-commerce is helping both our shopping experience and merchants and Shopify. Total revenue right now in just one quarter is over almost $1 billion, growing 110%. Subscription solutions is $320 million with more merchants joining the platform. That's the subscription SaaS revenue. It's accelerating 71% year over year. Merchant solutions is growing to $668 million, growth acceleration by 138% due to the gross merchandise volume, meaning more users, more merchants, and they are all spending more inside the Shopify platform, such that Shopify takes a rate on that. And therefore, merchant solution revenue is growing fast because of the GMV. So if you see that type of revenue, what does it mean? It means that e-commerce shopping is growing. That's why many people love C Limited. That's why many people love Alibaba. That's why many people love Amazon. That's why, in a way, Pinterest wants to be very strong in shopping. That's why Twitter wants to dominate e-commerce someday. That's why Facebook wants to dominate e-commerce someday. So e-commerce is life. That's basically what you can read into these earnings. Monthly recurring revenue is $90 million. Growth is accelerating. All right. Shopify Plus contributed, blah, blah, blah. Gross profit dollar growth, acceleration. Gross market merchandise value, an acceleration right now of $37 billion, an increase of $20 billion. Guys, do you understand what that means? $37 billion, 1/4. And then payment volume is $17 billion, 1/4. Gross profit accelerating 100%. Everything is triple digit for Shopify. So basically, if you have bought Shopify call options, your $25 that this client bought and $20 can realistically become $200 to $300 or 10x within 1 to 2 months. That's why if you put $1,000, your $2,000 can become $20,000 or through Awesome10X style. So next time, if you want to do that, it's okay. That's called out of the money call options. That is the application of the GME Roaring Kitty lesson plan. Okay. All right. So you saw that. You can read more about the outlook. I think more stuff to read on Shopify, but basically firing on all cylinders. Presentation. So the presentation is easier, 33 pages because it's a lot of pictures. Retail is changing, one platform, every channel, any device. So this is online, this is the brick and mortar, Amazon, Facebook pop-up. So this is Shopify, Snow Devil, your online shopping experience. Snow Devil is now powered by Shopify. Payments, capital, marketing, analytics, apps. Single integrated back office. They can handle inventory, fulfillment, order management, and shipping. So the retail is now very much armed because of Shopify, like an armor. Knight in shining armor equals Shopify. Our market, Shopify is the entrepreneurship company for all the merchants of all sizes. You just pay $29 per month if you're an entrepreneur. If you're a small, medium-sized business, pay $80 per month. If you're an advanced already, $300 per month. And if you're a larger brand, you pay $2,000 per month. Total addressable market is huge because there's $153 billion supposed small and medium business demand, which is a total addressable market. And larger brands are small, but this is the bigger pie, the middle class, the middleman. I'm sorry, the middle class. So the merchant acquisition happened because of the blogs, the word of mouth, and all of these. Entrepreneurs that we are helping. An example, Will Young is the front man of Young Man Cooking. He has a YouTube channel with over 300,000 subscribers. During the COVID-19, he wanted to monetize his growing channel, which led him to sell physical cookbooks and sushi making master classes through a Shopify store. During his time on the platform, Will has leveraged many Shopify features running his business, including Shopify Payments and Shop Pay. On a weekly basis, he uses Shopify email to connect with his followers and drive traffic to his online store. Right now, how much the Shopify market cap is, in case that you wonder, Shopify market cap is a fraction of the Amazon. Shopify is $160 billion. How much is Amazon's market cap? $2 trillion. Okay. $1.75 billion, or basically 1/10. Now, of course, you can argue, well, Shopify is not Amazon. True. Shopify is the anti-Amazon. Shopify is 1/10. If Shopify is 10, if Amazon is 10, Shopify is 1. If you believe that Shopify can become a $500 billion kahuna, that means that it's going to be $5,000 someday. That's why the call options on Shopify is worth a lot of money. All right, let's read. This is a typical SMB. Chocosol Traders is a bean-to-bar chocolate maker and coffee roastery founded by Michael Sacco. The Chocosol team works directly with farmers in Mexico, improving the diversity of the natural ecosystems, bringing economic opportunities to the indigenous communities of Oaxaca and Chiapas. Since joining the platform, they leverage many features using the Shopify point of sale to process in-person sales at their brick-and-mortar location and at local farmers markets. Because of the COVID pandemic, everyone's been using Shopify to accelerate their digital, and because their digital was accelerating 100-200%, Shopify takes a cut, and therefore everyone wins. Larger brands, you've got Heineken, Jameson, Molson Coors, all of them are also Shopify. Gymshark, KitchenAid, Staples, Heinz, General Mills, these are billion-dollar companies. Hallmark Cards. Merchant first, focus through product innovation. We lowered the barriers to simplify the operation so that we can catalyze that merchant sale. So online stores simplified, ecosystem, retail, payments, platform, everything all in one. Are they something like are they similar to Amazon? Yes. Are they similar to Alibaba? Yes. So is there a $1 trillion standing by? Yes, Shopify. Okay, rich and extensive, a partner ecosystem. Let's extend the value of the platform beyond our merchants. 6,600 apps, 40,800 ecosystem partners, making e-commerce better for everyone in everything that we do. Who's doing this, guys? Amazon, Shopify, Alibaba. Alibaba's doing this too. Making a social impact. I think actually there's also one company, HumblePay, I think is doing this too. And so that's a company that you want to watch out for. And it's just $1 billion company. So you might have a competition. Maybe it's too small right now, but maybe someday it will be strong. So it's $1 billion and you can see it's a 100x opportunity if suddenly it becomes as big as a Shopify, even if it's just helping a small country, 40 countries, Mexico, Latin America. Strong and competitive market position. This is Shopify. This is Amazon. 8.6% Shopify. Strong revenue growth. Merchant solution, subscription solution. Monthly recurring revenue growing from just $12 million per month. Now it's $90 million. That is what true SaaS scale means. 45% growth year over year. No, sorry, this is month. This is month after month, and this is quarter after quarter. Amazing, right? Accelerating the subscription solution, strong, consistent GMV growth, increased adoption of all the products. Once you're in, you can never go back. You want to enter the payments, which is also volume. Do you know who the Shopify payments is? It's called Stripe, 10X company. Shopify Capital, ShopPay. So that's what I think Shopee wants to do. So that's a 10X company someday in the future. Strong adjusted gross profit growth, improve operating leverage, build for the long term, annual cohorts. Okay. So why is it so important to watch the global market updates, guys? It's because number one, you get 30 minutes free access of just the best news stories that's important for your global investing. And I want to share that in our Discord channel, this is what you can get in our Discord channel. You've got the Discord voice. You get to hear me. If you want more money, you need to do what? Attend the Zoom class. You want to attend and watch global markets on Awesome10X YouTube channel every day. You need to be reading our Discord summary wherein we discuss, hey, these are the best news updates. You want to actually listen to Discord voice once in a while for real-time market updates. And you get to ask questions out straight from me for just 2,000. Well, it's 3,000 per month. For all of our older users, we have the grandfather rate of about 2,000 per month for all of them, 10,000 for 6 months for all of our grandfathers and grandmothers, our loyal subscribers. We increased the price because we are giving more value to all of our members day in, day out. Now, let's example, you don't have time. This is what you want to do. You want to just make money while sleeping. This is what you want to do. First, you have to finish the Zoom class of that company. Knowledge is key. Updates are important. What do I mean with updates are important? You know about Shopify. You need to understand, okay, what did Shopify do this quarter and the next quarter and the next quarter and the next quarter? You need to have full understanding of how to implement and master the portfolio construction for your chosen companies. Example, you have Spotify in your halo system of diversification. Oh, so the market made Spotify fall to $250. What should I do, Nikki? Nikki tells you, buy more, 240, 230, 220, no problem. You need to invest in 369 tranches quarterly. It doesn't mean that you have to do it every quarter, but if you have money this quarter, the best thing is to invest again this quarter. So you have money right now because you allocated $250 for your Spotify. Okay, buy one share Spotify tonight. And think of it as planting seeds. You're not going to sell it until 100%. And if it goes 100%, you take your capital off and then you let it all ride all the way to 10x. Best case is you can even sell calls if you know how to sell call. Example for Spotify. If you know that Spotify will not reach $300 anytime soon in the next 2 months, you sell call $300 2 months, collect the premium while you wait. And if that ever happens, it's okay. You've got a $250, $100 share. Actually, sell calls, guys, is 100 shares. So actually, it's not worth it for $250. If you only have one share of Spotify, you can't do sell calls. But if you have 100 shares of Spotify, you can sell one call so that you can deliver that Spotify at $300 within the next 2 months if you sold the call. So you still made 20% money and then wait for it to get down and then you can buy. And you also collected the premium. Now, lastly, of course, if you want to make money while sleeping, you still have to watch the Awesome10X YouTube channel. You get yourself updated in global markets. You don't have to check your portfolio daily, but maybe weekly, just to know how your portfolio is going. It's just like a plant. You need to see, hi plant, are you fine? Just talk to the plant, just talk to your portfolio. Hi Spotify, are you still watching? Yeah. So that's all. Basically, that's all that you do. Want to make money while sleeping? You can make the most of all of your learning sessions, but you have to promise that you are watching Awesome10X YouTube channel. So it's been a long time, 45 minutes. I'm sorry, I don't have time to answer all the questions, but last three questions before we close. SunPower at current price. SunPower actually is good at 25 to 27. You want to wait maybe, let's wait it out because SunPower might have been affected because Enphase had a bad quarter. So there's going to be earnings front on May 6, 2021. Either other people are waiting for the earnings to come out or you want to buy now. And then if you are, well, because we are very bullish on solar. But there is a problem that there is a chip shortage right now. So if there's a chip shortage or a silver shortage, maybe some solar panels are not able to produce all the stock, or sorry, all the demand. So there could be that perhaps problem. If there's that problem, you can buy SunPower lower, which means that you want to wait it out, but we are long-term bulls on SunPower. Thoughts on Lemonade and Fastly? I'm a long-term bull on Fastly. $60 is a great entry point. I think it's 66, 67 right now. You've got earnings palooza coming out. The earnings report of Fastly is coming out on May 6, May 5. So just next week. So if you are bullish on the earnings, you can actually do what we have. Like some clients of ours are buying out of the money call options. Let's say you think that Fastly is going to break $70 or $75. You can buy an out of the money call option at $70, or you can just sell puts at $65. I'm bullish on Fastly. There's a question you asked me, Lemonade. Lemonade is insurance. I think that right now it's strapped in a range. Lemonade right now is $80 to $100. In my view, it's just strapped in a range for now. So that's it. Thank you very much and hope that you had a great day and a great time. Bye-bye. See you again. Long time, no? 40